Good morning, trading world. It is April 18th, 2022, right at 7:49 a.m. And this is my pre-market outlook and technical analysis for day trading the SPY. Coming to you again, still on vacation. I said that I would try to get out at least a weekly outlook at the beginning of the week to let you know where my thoughts are and what's going on as I continue to maintain positions. So let's get right to it. Consolidation zone still in play. However, be prepared for high volatility coming as earnings and rates break. I said a while ago that the bond markets would do what the Fed either was scared to do, too slow to do, or just wouldn't do. And this is coming to fruition. And to look at this, let's take a look at the yield curve. And in taking a look at the yield curve, let's go back to when we got the announcement that the Feds would hike rates. All right. This happened back on, I think, March 16th, where the Feds decided that they would hike rates. And as you can see here, let's find the 2-year and the 10-year. As a matter of fact, let's go up here. So we see the 2-year is 1, 2, 3, 4, 5, 6 rolls over. 6 rolls over. Let's go back to all right, March 16th. All right, the 2-year is at 1.95. And this is around where we got the quarter-point rate hike, where the Feds announced that they would do the quarter-point rate hike. And what I kind of said, that whatever the Fed did, they were too slow. But the bond traders, the bond market itself, would go in and start trading bonds now that the Fed kind of let loose their grip on the bond market. And as you can see, since then, we have been on a steady rise all the way till now. So 2.47 on the 2-year and 2.83 on the 10-year. We have a bunch of inversions already in the chart, and it is just going to make it impossible for the market to continue any type of uptrend with rates increasing at this pace. So that's one of the things that kind of give me concrete evidence that the new trend that we're searching for is definitely down. So With that, you also need to be very careful. For those who watch the VIX, you may not get a real warning until it is too late. Selling throughout the markets is picking up, but the VIX is not keeping up with the amount of selling happening, because it will lag until we get near or break the lows of about 410 or so on the SPY. Because of these events, I am starting to look for bullish positions in TLT. As you can see, the 20-year bond ETF. I'm going to start looking for bullish call spreads. Pretty much where I buy the low call, sell the high call. And I'm going to start looking somewhere as far as buying the either 120, somewhere between the 120, maybe 122, and selling maybe the 24, 25, something like that. I won't exactly know until the market's open and I start pricing things. So that's what I'm looking to do. Also, at this moment, I'm also going to start looking for strong markets to short, pockets of strength in the market, things like consumer staples. And the reason I'm looking for strong markets is because when it really happens and markets really start to go down, we're going to reach, or we're going to have to go into what's called correlation, which means that not just the bad stocks are going to get whacked, but all stocks will get beat up in this. So that's why I'm going to start looking for pockets of strength to short. Starting with consumer staples, retails, things of that nature that have done or performed relatively good. Now, let's get into the key levels of the day. All right, here we are back with the key levels to watch for today. Starting on the resistance side, we have our jack resistance at 436 to 437 area. We have our queen resistance at the 438 to 439 area. And our king resistance at the 440 all the way up to the 445 area. On the support side, we have our jack support at 435 down to 434 area. Queen support is 433 down to 432 area. And king support at 431 all the way down to the 428 area. The main thesis for today is bullish, closing above 437.79 with a projected high or target of around 439 to 445. The alternate thesis is bearish, closing below 437.79 with a projected low or target of around 434 to 428. The weekly outlook is bullish, closing above 437.79 with a potential retracement up to 441.27 or so. Again, my faith in this measure of the weekly is weakening by the day, so be careful, because we are trying to establish a new trend which could break at any moment. The current channel we are in is 453 down to 425. That's the main channel. The minor channel being 443 down to 431. The next minor channel below is 431 down to 425. All right, let's bring up the scenarios of the day. All right, the first scenario and the greatest probability of happening today is our expansive range day structure. We could look to set a decision area lower boundary around the jack or queen support area before bouncing higher, and then a revisit or visit back toward the middle of the range by the end of the day. So basically what we're looking at, range day principles, but we're probably going to push boundaries on the higher side today. That's what I'm looking at. It's going to be kind of hard to tell because the higher time frames are kind of in that oversold area, but we're at that critical point where we could get somewhat of a bounce. But when things really break, and I can't tell whether it's going to happen now or later on in the year, but when things really do decide to break, it could possibly happen from a point of oversold where we could break even lower. And you'll be looking at a chart and it says that we're oversold and you'll be looking for a bounce, but we're going to get that opposite and oftentimes explosive opposite reaction of what we're looking at in the charts. So this is what you have to be careful on. So that's our first scenario, the expansive range day structure. And keep in mind, range day, we should usually cross back and forth over that previous close. This is where I give it that expansive range day structure title. Alright, our second most likely scenario is our rounded reversal day type structure. We could get a continued push higher toward queen or king resistance area and find our midday chop around either that queen or king resistance area before spending the same energy we use coming up to go back down the second half of the day. Now, we also have the vice versa warning on this as well. So this could look pretty much like this also today. So just be aware of that on our rounded reversal day type structure where we could actually head down first. So that's scenario number 2, and let's get the last scenario up. Alright, and here we are with the last scenario, which is our trend day down day type structure, which means we open gap down, symbolized right here by the blue line, which is the previous close from Thursday. We open below that and we start with a slight rally back toward that previous close. We find resistance on or before that previous close, then begin the downtrend for the morning. We find midday chop around either the possible queen or king support area, and that's when usually the second half of the day we kind of start with a head fake, which looks to be to continue the trend of the morning, and at some point closer to the end of the day we start to have a slight rally back. So that's our trend day down structure. This is the least likely scenario today, but we have to be very careful because of where we at in the volatility rankings, because it is likely we could get a big portion of both theses today because of where we are in the volatility stage. So we could see a big up as well as a big down portion of the day. So that is what I will be looking at. Again, the key things what I'll be doing for the coming weeks. Like I said, I'm going to start looking for bullish positions in TLT, which is basically the bonds. Looking at that today using spreads, call spreads, so that I don't get too beat up waiting on this turnaround to happen. And I will do the exact opposite on where I find strength in the market, starting with things like consumer staples and consumer retail. So when I say the exact opposite, I'll be looking to do bearish put spreads so that I don't get too beat up while holding and waiting for these reversals to happen. So that's it. I'm still on vacation, still trying to maintain and come in and upkeep and manage positions. So I'm in and out because of that, but I am still taking and still on a slight working vacation / vacation, if that makes sense. So as always, know your risk, and as always, wishing you a positive trading day. Have a great one.